Hey guys, it's Ronnie. It is Wednesday, June 24th, and today we're going to do a market recap with uh, some focus on the S&P 500, the Russell 2000, also precious metals, gold and silver, and the bond market um, using the TLT ETF as uh, as a proxy there. Also, we'll be looking at a couple of stocks that I am looking at and watching to get short. In addition, there's some earnings coming up tomorrow before the market, as well as today after market, which have already happened. And we'll talk about some potential earnings, post earnings plays on those stocks. So let's go ahead and start here, as usual, with the S&P 500. Now, on the right today, I've actually included a monthly chart because I want to show you what I'm looking at here in the S&P 500 on the monthly. So just taking a look at, I mean, you can really see how the purple complex trend line that we've talked about over the past several um, videos, how it's very clearly visible in this monthly chart, and you can see for the month of June, which is the last bar, it's a huge topping tail. If we stay where we are or if we go lower, it's a pretty big topping tail right there if it ends up closing out the month in, of course, we still have a week. We have a week left before that happens, but it could potentially be a pretty big topping tail. It would close if it were to close today. It'd be closing right underneath that complex trend line as well. So a pretty bearish sign, and the potential for more downside in the market, whether that's just really kind of a chopping neutral pattern or a curling over and continuing its uh, downward pattern. So basically, this would have been a huge bear market bounce, and then it's continuing its downward trajectory, potentially down to this area here, which is the longer term trend lines from 2009, 2008, 2009, as well as 2016. So these are kind of both in play, um, in this area. So let's go then now to the weekly chart on the S&P 500. Um, Same thing we talked about. If you look on the weekly, you can see it is actually closed last week, and then it closed last week right at that trend line, and this week it's below the trend line, and also below this longer term trend line, which is from the March lows. And there is also this other trend line that I've added here today, which I'll show you on the daily, which I'm looking at for it to break as well. It's a little bit of a shorter term trend line. Um, so here's the daily, and we talked yesterday about the consolidation that has been going on right in over the past several days in the S&P 500. So we were looking for a breakout either above this triangle or rather rectangle or below. And so either above for a potential move up to the bottom of this, the top of this gap rather right here, 3181.49 or higher. Or if it broke down below the triangle, which is below this, below the rectangle, which is below this consolidation range, we were looking for continued downside. Potentially, I was looking for the 200-day moving average or the 50-day moving average. It did, as it broke down today below its 20 moving average and then below the purple complex trend line here, as well as then below the rectangle consolidation level. I did actually get short the S&P 500 with some puts. If you go to the left chart, this is the 5 minute daily chart, so you can see exactly kind of where that happened, right at the lower end of this rectangle here at the bottom. You can see it broke down, kind of retraced a little bit, and then continued its fall. So this is where I got in. short the S&P 500 via SPY options. Um, Sorry about that. I need to mute this actually. Um, so that's what we're looking at actually for the S&P 500. Continued downside if it makes it below this shorter term trend line. So I'm in the money a little bit on those options already. So I have held them. Um, but you see that there is a 200-day moving average coming up, as well as this shorter term trend line, which is really just it starts back here in March and touches at the last um, kind of low area right here a couple of days ago last week. So it's just a shorter term trend line. You can see it actually hit it. It tagged it today, and has it didn't even tag it actually, or barely tagged it if it did, and it pulled up from that level. It bounced from that level. So we're looking for a continued a downturn tomorrow and break of that level, break of the 200-day, and then the next target would be this 29.65.66 area right here, which is this pivot. And that kind of goes along with the 50-day moving average, right? So even in 29.70, which is around where the 50-day moving average would be a first target there if it does manage to cross down below this trend line and the 200-day moving average. Now, if it can't cross below the 200-day moving average, that's a bad sign, and we'd probably get out of our shorts. But what we're looking for is break below this shorter term trend line, break below the 200-day moving average, and the target being right around that 50-day. I mean, you might see some support at the 3,000 level on the S&P 500 just because it's a round number. That is very possible. So that could be something to watch for. And then if it holds that level, you'd want to get out of your short positions. If it doesn't, or just kind of consolidates there, be looking for a continuation down to this area here. So that's the S&P 500 and kind of what I'm looking at with that. Moving on to the Russell 2000 index, you can see here this is the daily on the Russell. We talked about it being weaker than, of course, the S&P 500 and the Nasdaq. Nasdaq was at all-time highs actually this week. So we're looking here at the Russell, which is actually also rolling over, similarly to the S&P 500. So we're looking for very similar things here. We're looking for a break probably of this area, 1340 area right here, 4044, which was the prior low, in order to get any action towards the uh, further to the downside. And targets there are this trend line here, which is a complex trend line actually, that goes back to 2009. March of 2009 is where this started. So we're going to be looking for it to break this trend line. And then you've got the 50-day moving average at 1342. We have a pivot here at 1296. And then, it could go further down, from there. You see this area here, this pivot 1182, and then so on and so on. You see it actually peaked above its 200-day moving average over here in the beginning of June. So it was kind of a look above and failed that 200-day moving average, retraced just like the S&P, and then it's been pulling back. So I would anticipate some lower lows and lower highs on the Russell, which corresponded with things like the banking stocks, the financials, which we talked about yesterday, the XLF, which is the financials ETF. Also looking, I mean, I'm continuing to be looking at shorting that even more. I got into it today a little bit on the short side, and I'll be looking to continue to add to that position if I can, or when it pulls back. If it pulls up, bounces a little bit, I'll be looking to reshort. And that is why I keep an eye on the Russell, the small cap index. And here's the XLF just as a reference point. You can see here, I actually got into it short today on that same, at the same time that I shorted the S&P in the morning. So I'm just holding the positions that I have. I'm short via, again, options. And it is right here at the 50-day moving average right now. So we'll have to see what it does tomorrow. But I didn't want to get out of the position too early. So I'm looking for it to, since it did close below this prior low here, it actually closed below that today. I'm looking for further weakness. And this trend line here is a good reference point. If it can break this trend line, I see further lows um, in the XLF. So this trend line is kind of from the March lows. So be looking for it to break the longer term trend line from 2009, which is this one, and then this shorter term trend line from March, and then it can, there are some further uh, levels and references here. It could also be this could also be a reference 2010. So I'll be looking for it to maybe come into this in this area here, in this general vicinity, with these as targets. It has to get below these two trend lines though. So these could very well act as a level of support. The 50-day moving average, it didn't get below. So if it doesn't get below that tomorrow, I'm going to go ahead and get out of my positions early. If it can make it below this 50 moving average, you can see the 20s curling over too. So if it can make it below that, I'll be looking for it to break this trend line. And then my first target will be this shorter term ascending trend line here. So that's what I'm looking for. First target, this shorter term trend line, and then we'll go from there. There's this gap fill down here, and then we have some pivots here. There's also a gap here. So we have a couple of things we can look at. But for now, I am short XLF and SPY. Um, and that's just because it looks like the market is weakening and rolling over at this time. And I'll just go to the QQQ to show an additional example of this today compared to yesterday, and kind of what we talked about with it potentially being a topping tail. So we talked about in the Qs this bar from yesterday either potentially being a topping tail or an abandoned. I think they call it an abandoned baby, which is a candlestick pattern, which is very similar to this one here. This is kind of what it looks like on the left. It didn't do that actually. It did actually manage to fill in that gap and go a little higher than yesterday's range, yesterday's candlestick pattern, and the body of the candle. You see it peaked over it, and then it actually dropped. So it did open, go a little higher, and then continue to go lower throughout the day with the rest of the markets. So this was what we were talking about. Like we were looking at it yesterday, just like this, thinking, without this bar, thinking maybe um, you know, perhaps it could make a lower a move lower rather, and that's what it's done. And so it's kind of very similar to what happened a couple of weeks ago. So we could use there are a few things you can use as potential targets here. The 20-day moving average has shown to be pretty strong level of support for the Qs. So that would be my first target if you were going short Qs, which actually this is a good short opportunity to short the QQQ below today's low tomorrow. So if it gets below today's low, you could potentially short it for, maybe a few dollars down to this 20 moving average. It is kind of coming from an all-time high here. So if it can get below this channel, you see this kind of channel it's making, which it has made from the low here. If it can get below that, and I'll go ahead and put a trend line there so you can kind of see what I'm referring to. I'd have to probably do it from here. Yeah. Extend to the right so you can see what I'm talking about. This area. I mean, if you did it from here, it would be a little too steep. That's kind of a hammer pattern, and there's not really. I mean, it's similar, and you can add it there, but this one maybe make a little bit more sense. The one that's a little less conservative, I guess. So you have these. This kind of the first one corresponds here with the 20-day moving average. That's the longer term trend line. The shorter term trend line, it's right here at at around this 239.60 area. So I'd be looking for a break of this, and if it breaks that level, I'm gonna move this because that was from a prior high. If it breaks that level, I'd be looking for my first target right there at about 231. So that's what I'm looking at in the cues. And a lot of the stocks that we've been talking about, the tech stocks, have pulled back today. This is Apple, and I actually just spoke about it yesterday in the sense that it broke above the complex trend line, and what I would be the only thing I would be looking for in this stock was for it to pull back, uh, fail basically the breakout to fail, and for it to get through this level of consolidation and down below this 346.62 area in order for me to be able to get back into it short because it was so strong. It pushed right up. I thought that this purple trend line would be a good level of resistance, and it just because of its worldwide developers conference, just the stock just shot up, and it has shown some weakness today on okay volume. So let's see what it does the next couple of days. I mean, if it can come back below the purple trend line and back into this area of consolidation, I'll be looking for it to break down below that in order to get into it short again. So that's Apple. Um, Outside of Apple, I'm actually looking at NVDA too. So let's just check out NVIDIA. A lot of lines on this chart. I hadn't cleaned it up too much for you guys yet. Sorry. So here's the daily on NVIDIA, and you can see today it actually has shown a little bit of weakness. And this bar from yesterday, the one that peaked up above this longer term trend line here, um, this one, which goes back to 2017, I believe. Yes, this is a longer term trend line of tops. So it did peak above there and has kind of failed it. It also, obviously got above this prior high right here of 380 and got up to 385, but then has since come down. So I actually also got short Nvidia today towards around the same time of the day in the morning that I got short the S&P 500 and um, XLF. So I am still short Nvidia. I haven't gotten out of it, even though it did bounce kind of hard, towards the middle of the day. Um, it did come back down, so I thought I would just hold it till tomorrow just to see because it is a good pattern of kind of a secure high, right? It's a high book ended by two lower highs. So if it can stay below kind of this area right here, 370, I'd be looking to hold it for, for either to the first target will be the 361 level, which is the 20-day moving average, and then the 50 moving average is here, 330, and then you have this some other pivots, that you can use as references at different time points. But right now, using the 361 and then the 330. You could also technically, if you take a look here in this area of consolidation, there's so much consolidation right here, right at this level. This could also be a really good pivot around 347, 350. I'm going to just activate it because it looks like it'd be better right about there. Yeah, 347 ish. So I'd be looking at that as a level of support too. So these are kind of three levels: 20-day, 347, and then 330. So that's NVIDIA, and those are the three positions I actually took today. I'm still holding gold. I'm still looking at bonds. So let's go into that next. So for gold, um, here are the gold futures. They did actually have a little weakness today, but not much. But they did. Uh, you remember me talking about this double top up here potentially, and so it did pierce. It did go above it a little bit, but came right back down low and closed below it. So that, to me, I didn't want to get more. I didn't want to buy more of gold yesterday, which is what I said I would do if it pushed above this high. But because it closed down below it, it was kind of weak towards the end of the day yesterday. Today, it did open lower, but it kind of pushed up a little bit, um, and it wasn't actually. It didn't show too much weakness. It was weak, but it was like not as weak as maybe it could have been. Even though the market was going down, gold technically should go up as the market goes down, but it held its own and it hasn't come back down below this trend line here, which is why I bought gold because it crossed above this trend line. So now I'm using this trend line as a support and a stop. So if it gets below this, I'm going to stop out of gold. Um, and I don't think we talked about INDA previously. Since I had stopped out of it. I just want to make sure you guys knew I did actually get stopped out of INDA several days ago, as well at the level that we talked about. So gold, I'm still holding on to, and I'll just go into INDA quickly because I actually remembered. I don't think I told y'all that I got stopped out, but I think you knew based on my video that this red dotted line was my stop, and I actually got stopped out pretty with a little loss here because it gapped up above that on the 19th. So I was stopped out of INDA some days ago, about 3 days ago. So just a reminder there. I mean, it is coming back down. It is showing some weakness, but I didn't expect it to get above this level of consolidation, but it did, and pretty strongly. So I was stopped out um, of my position there in INDA. So let's go to bonds now and kind of see what's going on there. They were really strong today. Um, bonds actually, this is today's bar. Bonds, and let's look at the TLT because it's easier to see there what it's done on the daily. So here's the daily intraday chart of the TLT, which is the ETF on the bonds, the ZB. So you can see it actually, was pretty strong today, up about 1%, a little over 1%, and still going up after hours. So we talked about in ZB, and we can look at that again on the daily, that you know I'm going to want it to get above this little area right here, where it had some resistance previously. And the 50 moving average is there too. So I really am going to need it to get above that in order to get interested in it. If it pops really high above it, fine. I'm going to wait for a pullback and then get into it. But it has crossed above this trend line that we spoke of. You can see on the daily it has this kind of big old H pattern, um, uh, rounded top type of thing, head and shoulders, whatever you want to call it. So I did put a little trend line towards the back side of that pattern, and it has crossed above it, but more so from a time perspective than anything else. But it is good. I mean, if it can make it above this area where the 50 moving average is now, that is something that I am looking to get into. So in the next couple of days, I'm going to just keep watch here. I'm going to put an alert right at that 50 moving average. So if it pushes up above it, I'll be getting into bonds. Probably not into TLT, maybe into um, tips or um, shorter term like SHY, ZROZ, shorter term bonds or tips. So that's what I'll be looking at if it pushes up here. TLT would be fine too, honestly, but I already have some TLT in my retirement account, so I'll be looking to get into a little different position in my trading account. Okay, so that is bonds for us. One other idea I had, and I'm looking at, is healthcare. So just thinking about what's going on with COVID, right, and all of the um, back and forth. Now states are kind of pulling back their phased reopenings and thinking about, maybe they need to pull back on some of the freedoms, I guess, that they gave people back going to restaurants, like, not wearing masks or making it optional. So a lot of people are mandating masks now. There's restaurants that are closing proactively. Disney is even asking, the Disney World employees are even asking their company leadership to hold on hold on opening their parks. Apple's closed several of its stores, some in Texas and states that are showing a higher rise in cases. So, I mean, you know, healthcare has already been struggling through COVID, even though, we have some uh, biotech stocks and some pharmaceutical companies that are benefiting from it because they're working on treatments. Overall, healthcare itself has been actually struggling. We're not doing elective surgeries. The hospital admissions rates are much lower than they have been pre-COVID. Hospitals are furloughing employees because they don't have enough work to do. I have, friends that are in the healthcare industry and are taking on more work in order to keep their job because um, they're having to lay people off because there's just not enough work, and these are in large hospitals, in big cities even. So I'm looking to actually short healthcare. I should have gotten short today. I didn't. So hopefully I'll get an opportunity to get in tomorrow or the day after. But if you look at the weekly chart, this trend line actually has been broken, so we're going to take that off. But if you look at it on the weekly, you see it's just bounced really hard after the COVID crash and has been kind of consolidating here. Instead of going up, though, it did come back down at the beginning of June with the rest of the market. So what we're looking for here is, and it did not make it to the prior high here. So even though this is kind of a slightly lower low, 104 ish, it's still a lower high rather. So we're looking for either it to break out of this range here. You can see it's in this consolidation here ever since actually about April. It's just been in this range. So if you saw on the weekly, there was a level of support down there, and even on the daily, you can see the 200-day moving average is this white line is right here, coinciding with this pivot around 96.83. Um, After the 200-day moving average, you can see this prior low, which is at 95.42 actually, is the next level of potential support that it needs to break through in order for it to be kind of a stronger signal of selling. So, whereas it has kind of gotten right to that 200-day, it needs to break through it and actually get down below this prior low for me to get further in to that position in the short on the short side. I would personally buy it. I mean, buy puts on it or short it as it crossed through the 200-day moving average to the downside, and then I would probably add more as it crossed down below this 95.30, 95.42, which is the prior low. So I would buy some here as it crossed through there, buy some puts or short it, and then buy some more puts or short some more as it crossed through that level. And then, of course, targets. It has a gap right here, so we would use this about 94.47 area as first target. And then it actually has quite a bit of ways before any other real pivots. You can see this gap here could be a potential level of support. Um, Either one of these, really, it's mostly the filling of the gap that acts as that level of potential support. These are old drawings, so I'm going to take them out. And the next level could be down at 83.92. So you have some levels here to look at. But healthcare, fundamentally, I think it's going to be struggling. Um, and then, of course, coming into the next quarter's earnings in the next few weeks, we'll probably see some of these companies report bad earnings. And you can see with the volume increasing on the down days, I would anticipate um, further downside. You see here, June 11th, where we had that big drop. The volume down at the bottom is the highest it's been all year. And then if you look at actually the highest it's been, yeah, all year, even through these initial crashes and the capitulation down here at the bottom. This is the highest volume it has been that this particular ETF has had is right here, just a couple of weeks ago. And so you see that the volume also was, I mean, then all this bounce here was on lower volume, and then you have a continuation of the increase in volume on the down day, on the down day, which was today. So I'll be looking for further downside in healthcare. Um, and then lastly, we have a couple of earnings for tomorrow. Today, KB Homes actually reported, KBH, and you can see it actually fell on earnings, on its earnings, which is surprising because people have been pumping up home builders and um, other home stocks like Lowe's, Home Depot. They're at all-time highs. So for KB Homes, which is in that group, to fall on earnings, um, you know, $5-6 for a $30 stock is kind of a lot. So it fell quite a bit on on the after hours here, and so that was surprising. Actually, I thought it would go up. I was really surprised to see it fall. Um, so now you can see it has actually, what I was looking at earlier is this 2963 level being maybe a level of support. It's actually fallen below that already since I looked at it last. And so honestly, it looks weak. If instead, what my original thought was that if it could hold this level, I would look for a potential recovery from this level in the morning. Now, if it can't, if it doesn't, I mean, in the as we go into the pre-market tomorrow, if it doesn't like get above that level pretty strongly, I don't think I'd be with of that same opinion. I think I would be looking to short it on any kind of bounces. So if it happens to kind of recover a little bit up to 2963 and around there, doesn't move, it doesn't go much higher, it doesn't cross 30 and keep going, if it kind of stays below 30, I think I'm going to look to fade that on the open if for some weakness down to this 50 moving average 2884. It's already there now. So if it stays where it is now, if it has any strength in the morning and it doesn't really get above $30, I will look to fade it back down to either the overnight low, whatever that is, if it's 2860, or the 50-day, whatever. And then potentially you have some other pivots here you can look at. You've got this gap at 2638 and then closing at 2522. Then you have this prior low here at 2256. So these are the pivots I'll be looking at for fading KB Homes tomorrow. If it doesn't get strong into the open. Um, if it stays where it is at 2860, which means it'd be opening right around here. I'd be looking to maybe it recovers first thing in the morning and then rolls back over. I'll still be looking for fading bounces on the open in KB Homes if it maintains this uh, range here between 2860 and 2963. So KB Homes is surprising again that it was weak compared to the home builders. The rest of the home builders in the home index, you can see Home Depot was at all-time highs. It has shown a little weakness, but it's still pretty high up there. Um, and then the XHB, which is the home builders index, is also pretty strong, although it has a little weakness today, probably even in the after hours off of the earnings from KB Homes. So, this actually is a really good thing to look at while we're thinking about fading KB Homes in the morning because this actually is weak, weaker than I thought. So you can see it made a lower high up here in June 8th, and it has done what the rest of this market, S&P 500, has done, is kind of rolled back over. So as it's weakening, and it will weaken tomorrow because KB Homes earnings, it kind of gives you confirmation of shorting that kind of a name, right? After earnings on any weakness. So that's one name. The second is McCormick, and that's not reporting until the morning, but I'll just wanted to share it so that people could kind of start looking at it. McCormick has been pretty strong, really strong, with the stay-at-home economy. This is like spices and things of that nature. Um, and I anticipate it to be strong after earnings tomorrow. Um, Granted, the market is weak, so you never know what's going to happen, but I think it's probably going to pop. So I'd probably look for it to even get above this 180.38 level pre-market tomorrow, and I'd be looking to, to continue, like to use that momentum and buy the open, uh, depending on where it is, and continue to, uh, ride the momentum to the upside. There are no targets there because that was an all-time high, so you'd have to, either just trail up your stops or use um, kind of a, measured move situation. So, like for example, you can see this little level of consolidation here is, between 180 and 166. It's about 20 points. So you could use that as a potential. Maybe it goes up 10 or 20 points. I would use round numbers as levels, right? Um, Also, you use Fibonacci extensions. You could take this Fibonacci, um, levels from down here at the bottom in March, the 112.23 area to the top, 180.43, and that could also, that extension of 23% there could also be an area you could look at for a potential, level or a target as you buy the stock. But that's what I'm looking at for McCormick. It could do the total opposite, and that would change my thesis altogether. But what I'm looking at is for a positive earnings report and a pop in the stock, and then we'll continue to we'll look to buy it on the open or any dips in the morning after the market opens. And that's all I've got for you today. Thanks for tuning in and listening. And I hope this helped in some way as I talk through my stock picks and just market overviews. It really helps me think through what I'm doing for trades. So I appreciate you guys also being a part of that. If you want to be notified when my next video will be released, just subscribe to the channel. And other than that, happy trading all. Take care.